I'm Charlotte McLeod with the Investing News Network, and here today with me is Rob McEwen, Chairman and Chief Owner of McEwen Mining. Before we get started, just a quick reminder that if you enjoyed this interview, make sure you hit the like button and subscribe to our channel. Rob, thank you so much for being here online with me today.
Glad to be here.
Really happy to have you here today. And of course, we usually start off by talking to you about gold, but today I thought it would be more appropriate to begin with copper. McEwen Mining just announced the creation of McEwen Copper, which is a new entity that will house the company's copper assets. So I think we'll start by getting into that. Maybe you could tell me how long you've been thinking about that idea, how it developed, and share the details with us.
Sure. We have a large copper asset in Los Azules, and it's long been one of my favorites because of its size. And we wondered, how do we monetize that value? In 2019 and 20, our poor operational performance overshadowed our exploration success, but also these copper assets we had. And with the increase in the copper price to over $4.20 today, these assets took on a very different profile. And we said, all right, how do we surface that value? In a precious company setting like McEwen Mining, the copper asset is very large, requires a lot of capital, capital in a size much greater than what our market cap is in order to be developed. And it seemed that the market preferred a precious metal company and a separate copper company, and you could finance the copper company easier. And so for quite a while, we've been thinking about how do we best finance this asset. And when you look at it, I mean, you can look at it a number of ways. I mean, if we took it back to looking at it like a gold property, it's indicated and inferred resources total 29.5 billion pounds of copper. There's 5.5 million ounces of gold and 190 million ounces of silver. Now, the gold and the silver are low grade, but nevertheless they're there. And if you were to take today's prices and convert those copper pounds to the equivalent of a gold ounce, you'd have a deposit that is equal to 70 million ounces of gold equivalent. The PEA that we did in 2017, when copper was above $3 a pound, suggested that we could have a mine that would run for 36 years, and the first 13 years producing in excess of 415 million pounds of copper at a cost of $1.14 a pound when you include the gold and silver credits. Now, again, if you wanted to put that on a gold equivalent, that's just under 1 million ounces of gold a year at a cost of under $500 an ounce, cash cost. So it's a big project. It has a capex of better than $2 billion. And thinking that putting it into a separate company. Now, part of the problem was that we didn't have a treasury that was large enough to fund Los Azules, and our share price was low, and I believe it's still low. So the type of financing we'd have to do would be quite dilutive. So that's why we looked at putting into a separate company. And I was just growing impatient. The copper price is up, copper is hot. The Argentinian government, where Los Azules is located, was keen to see this project go forward. And that's why I said, all right, let's get it going. $80 million will get us a good way to a through a pre-feasibility study and close to completing a feasibility study, it'll allow us to improve the access to the property so we can get at it 12 months of the year rather than 5 months of the year. And so I said, all right, I'll start the ball rolling and I'll put up $40 million of the 80 million we're looking to raise. And that'll get this project underway. And hopefully, when you look at it, it will compare very favorably to a lot of the other single copper asset development projects. So we tried to do something back in 2013, but at that point, the copper price and every other metal price was falling out of the sky. And the senior management teams of a lot of the base metal companies were changing. And the market disappeared. In 2015, it bottomed, and now it's come back. And it looks like electric vehicles and the continuing growth of Asia is going to keep powering copper. And there's a deficit out here. So it's one of the larger undeveloped copper projects not owned by a major. And we want to push it through and see it built. So that's how
lots
long we've
going
been
on.
thinking about it, Charlotte.
Quite a while. And, you mentioned that right now with the copper price being higher, lots of attention on the copper market, it feels like the right time. Maybe you could give me just a quick idea of where you see the copper price going over this cycle and how the development of the new company and the project fits in with where the market may be going.
Well, let me start by saying this project, Los Azules, is quite sensitive to the price of copper and offers a lot of leverage. When we did the preliminary economic assessment back in the summer of 2017, using a $3 copper price, the net present value at an 8% discount rate was $2.2 billion. At the current price of $4.20 a pound, using the same calculation, the net present value at an 8% discount has increased to over $5 billion. So you can see that this has enormous leverage to the price of copper. As to where is copper going, there are deficits being forecast by many of the brokerage firms. Goldman Sachs is one of the ones leading that. Could copper go to $8 or $10 a pound? I've seen some of those numbers. I feel that the demand for copper is going to increase with the growth of Asia, with the growth of and the proliferation of electric vehicles and the use in regenerative energy. I think we're entering a strong period of demand for copper. So all that's very good for Los Azules. And in McEwen Copper, we've also put another copper asset that's located in Nevada. It's an earlier stage exploration property, but it's a porphyry copper target. It's a copper gold molybdenum target that we'll be exploring on as well.
So yeah, definitely things are looking good for copper. I know at McEwen Mining's recent shareholders meeting, you were talking about opportunities to monetize some of your assets that might be a little bit overlooked. So you talked about copper, and I know you also mentioned that the company essentially contains a separate silver company as well. So does that mean we could see a McEwen Silver potentially in the future?
We have been looking for some joint venture partners on the silver. Yeah. As you said, our silver and copper assets and even our exploration success was overshadowed in the last year, 2 years, by the poor operating performance. And if you look at the silver assets, we have two properties, our Mexican property and our property, our joint venture in Argentina. Our partner in Argentina on the San Juan mine, Hochschild Mining, is a silver producer, and they convert their, this mine produces gold and silver, but they convert the gold to a silver equivalent. So using their formula, if we took our 49% interest, that would represent 5.6 million ounces of silver equivalent. And then in Mexico, we have our Phoenix project, which is a fully permitted feasibility study with 2 phases of development. And you could see over the next couple of years, production going from 5.6 million ounces from these 2 assets to up to 10 million ounces of silver equivalent a year, which would put us into pretty good company in the mix of silver producers that are currently publicly available. So it's exciting.
All right. Yeah, it is very exciting. We've heard a little bit about copper and now a little bit about silver. I'm going to take you over to gold, which is where we usually start. And I'm sure anybody who follows you knows that you're very well known for your $5,000 gold call. And I remember when we last talked around the end of last year, you thought there could be potential for it to go even higher than that amount. This year so far, we are down from where gold started in January, despite many factors that arguably should be beneficial for gold. So the question is, what do you think is going on with gold right now? What's holding it back at the moment?
I suspect the key factors that are holding it back are a broad belief that inflation is under control, that gold is an old school investment and no longer relevant in a digital world, and the strength of the broad market has people more occupied with it. I do see the situation changing, and I expect the change to be significant. And the cause is that governments worldwide have unleashed an unimaginable and massive growth in the global money supply. In addition, they've strangled their economies and incurred enormous debt loads in their efforts to combat the COVID pandemic. And we're already seeing early signs of coming inflation. Believe they're evident everywhere one looks. I mean, the very foundation of our modern economy and lifestyle is heavily dependent on the utilization of raw materials. And during the last 12 months, the prices of many essential commodities have experienced large price jumps. And it won't take very long for these increases to be reflected in the prices of finished goods, services, foods, and followed by demands for higher compensation by labor. And that's when that inflation will become evident, clearly evident, and gold will start performing.
So the tipping point for you would be when more people start to realize inflation is actually happening. It's interesting you mentioned that because for me, when I'm speaking to people, I hear from a lot of people who are very, very clear that they believe it is indeed happening. So we just need the rest of everybody else to wake up a little bit and see that that's happening.
Yes, I mean, I think you won't have to be patient much longer. I think within the next 12 months, you're going to start to see the price of gold moving higher. Just reflect on, I don't know if you ever buy plywood. I don't think you would, but building supplies plywood has tripled in the past 12 months. Oil has almost doubled. Silver almost doubled. Copper more than doubled. You just run through all sorts of commodities. All these prices are jumping, and they are key inputs, as I said earlier, into the finished goods and products that we use and services that we use, transportation that we use. The government's telling us, well, there's not a lot of inflation, but just recently they're saying there was a jump. But it's coming, and the amount of money they've put into the system, the amount of debt that they've incurred, the amount of misappropriation of capital is without precedent in a historic sense, because this is global, not restricted to a few countries. So I think people need to think about being prepared for this, and start adjusting their portfolio to cushion the effect.
Definitely better to be earlier than later. I want to talk a little bit more about McEwen Mining now. I remember 2019 and even 2020 weren't necessarily the best years for the company, but I also know you're confident in a turnaround. So maybe you could go over what changes you see coming into action this year or have already seen come into action in the first half of the year, and maybe talk a little bit about how the company's share price has responded to these efforts that you're doing.
Charlotte, you've been very kind when you said that 2019 and 2020 weren't the best years. From my perspective, those years were brutal, and our share price was crushed. However, in the last 15 months, we have made significant progress, and much of that is due to the energy, experience, and attitude of new senior management at head office and at our mines. And they've been driving the turnaround. Back in March of 2020, our share price got down to 62 cents US. And since then, our share price has more than doubled, and today is trading at $1.35 US. So what's driven this? Well, let's start with year to date. Our production guidance we're meeting, and it's on track for the year. We refinanced our debt and extended its retirement from August of this year to August of 2023. Our financial statements no longer carry a going concern qualification from our auditors. Our treasury is growing as a result of the higher metal prices. And it's more than sufficient to fully fund our activities this year, which we weren't able to do in the previous 2 years, and as a result had to do some financings at prices I didn't find attractive, nor did other shareholders. The dividends have resumed from our joint venture in Argentina, and our exploration on our properties in Canada, Nevada, and Argentina are successfully expanding our resource base. So there's a lot to smile about this year, and seeing this turnaround happen.
Right. So I believe this year you're expecting gold equivalent ounce production to be 20 to 40% higher than it was in 2020, which of course is a big improvement. I wondered if you could maybe put it into context of some of the previous years, since 2020 was a little bit of an anomalous year in many ways.
Sure. So to start, to the end of the Q2 of this year, we're slightly ahead of our production guidance. Relative to 2018, we're approximately even. And if you look at 2019, we'll be 6 to 17% lower than 2019. We're building production back up. We're working on a preliminary economic assessment for expansion of our operations in Timmins. And that is, we'll have that out later this year. We've expanded the mandate to look at all of our resources within the Timmins district, which amount to more than 3 million ounces. We feel there's good potential to be able to expand that production base. In Nevada, we're exploring near mine and hope to extend the life of the mine there. We have a large land package that we're confident the exploration will deliver an extension to that life as well.
Well, I think that also then covers my question on exploration. I know that's really important to McEwen Mining, so I was going to ask about some of the highlights from this year. Another thing I did want to cover is what you're seeing in among the gold companies in general. What is the performance looking like, or any trends that you've noticed in 2021, just in the broader among the broader companies?
Well, certainly in the last couple of years, the royalty and streaming companies caught most of the investor dollars, and they performed very well. As the gold price started moving up and the capital markets started opening up for exploration plays, the seniors were the first recipients to see the appreciation. But now we've been seeing some very interesting exploration stories. They ran in the first part of the year, and they're taking a break, but the results are still coming out. A lot of the seniors went out of their way to get rid of their exploration departments or downsize their exploration programs in order to keep their growth. I think they're going to be reaching, and they have been reaching down into the junior sector, but I believe you'll see more of that in terms of consolidation taking place. In the last, well, since March of 2020, we've outperformed the GDX index. We've outperformed the performance of silver, copper, and gold. But ours was, I think, a special situation where our price was really hammered. We're coming off a bottom, but there's still quite a bit of room on the upside, because historically we've traded at a premium to the GDX. And just to catch up to the GDX, we have to add at least $1 to our shares price just to catch up to where they are. And to go beyond that, we just have to demonstrate that we're continuing to beat guidance.
All right. And finally, just before we let you go, if there's any advice you would leave investors with for this time that we're in, you mentioned preparing for this inflationary environment that you see coming. What would you leave the viewers with?
It's a short comment. Get ready for the coming tsunami of inflation. Buy gold, silver, and commodities. Period.
Short and sweet.
Yes.
Yep. Short and sweet. I like it. Thank you so much for being here to speak with me. It was great to catch up and hear what's going on at McEwen Mining. It really seems like there's lots of good things in store.
Thank you, Charlotte. And I agree. It's getting much better.
Great. Well, until next time, I'm Charlotte McLeod with the Investing East Network, and this is Rob McEwen with McEwen Mining.